Good morning, everybody. Welcome to the Flow Show. It's Thursday, 13th of March. And plenty of headlines to get through as usual today. A few market moves going on. Some key levels to keep an eye on, particularly gold is up at a very important level. So we need to keep an eye on that one as well. We'll go through all the prices and whatnot shortly. Let's get through some of the headlines first. Oh, let's get rid of that. Cheerio. Over in Japan, BOJ Governor Ueda says underlying inflation is still below 2%, though it's expected to gradually accelerate with the economic recovery. Japan Finance Minister Kato says the economy is facing supply shortages, not demand weakness. Japan is still unable to declare a permanent end to deflation, based on underlying inflation and price gauges. We've also had some wages news out from one of the big unions, coming in a little bit softer, just over 5% when just over 6% was being demanded. So not bad news. It's still a decent over 5% gain, although it hasn't hit what was expected. And we saw that, I mentioned that yesterday with the three main car firms, two of which came in a little lower than expectations or what was demanded in wages, but still decent wage bounces anyway. Tomorrow we do get the big Rengo announcement of how the first round in wage talks have gone. So it's going to be the big one. But for now, it's looking like wages are going up, but they may not be busting the numbers that we saw last year. Regarding the BOJ, Reuters had a poll out where everyone expected or is expecting the BOJ to hold rates next week, 0.5%. Then they are expected to hike 25 pips in Q3. That's according to 70% of economists thinking about a Q3 hike. That's up from 65% in the February poll. Most of those expecting July to be the time when the next hike comes. Personally, and I know Kay's in the same viewpoint, there is a potential for a hike if these wages go well. That doesn't mean they have to be all busting. They just need to be on and around a decent amount. So I'm in the camp that I think there may be a hike in Q2 after we get all these wage deals out the way and everyone knows what is coming, and particularly if inflation is still holding up. So I'm a bit different to these economists. I think there's a higher risk of Q2 hike than these guys think, but we shall see. It's all going swimmingly over in France. They've cut their 2025 GDP growth forecast already. We're only in March, and they've cut it to 0.7% from 0.9%. They see Q1 growth coming in between a whopping 0.1 and 0.2%. Go France. They also cut their 2026 GDP forecast to 1.2 from 1.3%. We've got a load of guff going on in Germany around this defence spending stuff. Parties in Parliament, the Bundestag, the lower house session, all debating about this defence fund. The Greens are, as Mark in our chat room pointed out, using their 15 minutes of fame to put a few flies in a few ointments. They're still playing hardball over what needs to be done with this fund before they start backing it. So that's going back and forth in there. The actual session itself starts from 12 o'clock, I think. Parliament opens. That's 12 o'clock local time. So that is in about an hour and a half. And in about 20 past 12, they start on that discussion, but that will run through the afternoon. We've also potentially got this AFD Constitutional Court hearing today. They're trying to put the blockers on the whole thing about changing the debt brake rules in this early Parliament session, which is not a proper Parliament session, if you like. That may not happen until later on in March. So they're trying to put the block on that. Long story short, the ruling party, CDU, SDP, is trying to push through a reform to the debt brake, so that will help with this defence fund, investment fund they want to create. But the AFD are saying you can't do that. It's unconstitutional to do that when it's not a proper parliamentary session. They're not in Parliament properly yet. I don't understand most of it, but that's the long story short. So the AFD court could stop the debt brake reform being put through in this lower house, and that means it all becomes a big mess, because when it goes to full Parliament, AFD will potentially have a swing vote on whether to pass it at all. So it's all a bit messy. I don't understand most of it, but Greens and AFD are throwing spanners in works. That's all we need to worry about. Euro not really reacting to all this news that this stuff can potentially be waylaid. I think the market is in the mood where we've got these two parties trying to, at the end of the day, probably get some concessions for themselves or some bits and pieces out of the fund. So they're pushing their oar until they get those concessions. I think the market thinks there will be something coming at the end of the day, even if there's a few speed bumps to get over. But anyway, we shall see. If we get bad news from this, we might see a bit of a sell-off coming in the euro. Bundesbank's Nagel says US tariffs on the EU could push Germany into recession this year, which wouldn't be a big shock. And it sounds like it's getting the excuses out because they've been circling the drain for the last couple of years on the recession front anyway. It won't take much to push them into recession, let alone tariffs. He's also saying that inflation will be back to target at the end of this year. ECB's Kazakhs, one of the hawkish members, says we can't say everything is done on inflation. Rates need to be decided meeting by meeting amid uncertainty. So he's not ready to do victory laps just yet. Bit of data out yesterday, and just something I'm going to keep a bit more of an eye on now. It's the NBA mortgages, another healthy jump, or 11.2% in mortgage applications, following a 20.4% jump there. The 30-year rate coming down a bit as well. What I like to look for in this data is a bit of a trend. So beginning of the year can be a bit wonky. We can see that index dying off in the latter part of the year, first week of the new year. As you can see here, I'll just show that quickly. So you can see there coming in to the latter part of the year, new year, we saw some big swings. Obviously, not many people are buying, moving house over the Christmas period, and then it all jumps back a bit. But the numbers have been running pretty steady, but we've just had a couple of big jumps in the early part of March. Just something to keep an eye on in case we're getting a bit of a trend developing. The recent housing data that we've had out, the main hard data, just has been on a slightly soft side, so this might indicate that we may be getting a bit of turnaround, which then will be another sector that maybe some were getting a little bit bearish on, and that proves not to be the case. So just something I'll keep a closer eye on over the weeks ahead. CPI data, the big number, came in lower than expected in both counts, core and the headline. So for about 5 minutes, that got the market thinking a little bit more dovishly about the Fed. As I say, that lasted about 10-15 minutes. We saw a sell-off in the dollar, then it all reversed pretty swiftly. Overall, I'm not getting bothered about this data, particularly until this core number gets below 3%. Okay, as you know, I've been banging on about it. It hasn't been below 3% for coming up to 4 years. That's not inflation moving to target in Fed speak. So I'm only going to start paying greater attention to this if we start getting inflation coming in below 3%. So many other numbers though. Everyone likes to pick up the third decimal places. We had the super core number out, which month on month came in at 0.215 from a prior 0.757, so a lower monthly reading there. Year on year number also in lower, 3.78 versus 4.02 prior. Within the data, the services inflation, that's the much watched component of the whole thing, came in lower. Some of that might have been driven by transport, which saw a big jump last month, and that seems to have washed out a bit this month. On the wages front, though, earnings year on year, real average hourly earnings year on year rose to 1.2% from a prior revised 0.9%. So still a little bit of wages heat coming into that. All that data got the market not really changing overall cut amounts for the Fed. We're still waffling about the 2 to 3 cut area, probably nearer the 2 cut than the 3 cut. And we just got a little bit of calendar jumping around, as we often do. So the next Fed cut is now being priced for July versus June. Bank of Canada, they popped up with another 25 pip cut. That puts their rate at 2.75, which is bang in the middle of their neutral rate range, which they made explicit in the statement. The first big line out the statement saying we will proceed carefully with any further rate changes, which hints that a pause is potentially on the cards. We're now facing a new crisis, says Macklem, and the economic impact of US tariffs could be severe. Now, Macklem was, apart from his usual wooden, boring self, he was trying to talk up the potential negativity from all this. He was sounding almost alarmist about it, and I took that to mean that maybe he's showing his dovish colours there, and it will give him an excuse to keep cutting. Basically, he's shit scared of what all these policies, Trump's tariffs and everything, will do to the economy. He said in the presser that we did not want to get ahead of ourselves with the latest cut, and that the Governing Council sees rates in the neutral range. Then he was out in the press after that a few hours later, and he said they did discuss pausing at 3% ahead of today's announcement. And the argument for a pause was that growth had been stronger than expected, but they were waiting for clarity on the US trade policy. Again, repeated the same sort of line that he had in the last meeting, that they felt it was most appropriate course of action was to cut 25, given that tariffs are expected to cause economic weakness. So they're pretty much trying to front run that with these rate cuts, and that inflation is close to 2%. He also said that they're not ruling out any unscheduled rate moves if something severe happens suddenly. Canadian swaps markets, they see now April as a 50% chance for another cut coming then. We are probably closer to a pause than we've ever been. I thought we might see a bit of it yesterday, but no, they cut. But yeah, the signals are there that they are closer to a pause anyway. Right, getting into all the geopolitical crap. There was a report out from the GEP, which run a global supply chain volatility index. Highlights of that saying that US manufacturers are stockpiling and ramping up purchases, but Canada and Mexico have reported sharp declines. We've obviously seen that in the trade data of late from the US. A lot of front running still going on. That's probably going to continue while this tariff mess goes on. There's been the usual every 5 minutes back and forth with what's going on, and Canada and US, and Trump's going to do that, and Canada's going to do this. So that's been going on. I'm bored with all the headlines, so I'm not listing them. Lutnick, though, is playing his good cop role regarding Canada. Talks are ongoing over there. There's been more than a few shots taken at the EU, and reciprocal stuff being thrown the other way from the EU. US Trade Representative Greer says EU trade policies are out of step with reality. And we were laughing about this yesterday in the Flowonomics room, because one of the things apparently the EU wants to do is tariff US states. So they want to input tariffs by state. No idea how they're going to do that one, how they're going to administer that one, but that's the EU for them. They might have something in place by 2050, who knows. Over to the Ukraine stuff, because that's still ongoing. Secretary of State Rubio last night said we had conversations about territorial concessions, and that the bulk of conversations with Ukraine was what a negotiation process would look like. He says that Ukraine needs sufficient deterrent against future attacks, and says if Russia says no to all these talks, it will tell us a lot. Trump was out, no doubt, or of course, on Russia, saying we can pressure, but hope pressure won't be necessary. It says there are things you could do in a financial sense that would be very bad for Russia. So the line of thinking is that if Russia doesn't come to table, want to get peace, he's going to nail them financially, which is obviously less than doing anything else. Russia last night came out with some comments saying that it has laid out demands for talks with the US on Ukraine. However, these demands are pretty much the same as what was presented to Biden a while back, which got dismissed out of hand. The usual stuff, they're calling for no NATO membership for Ukraine and no foreign troops in Ukraine. Then this morning, Russia issued some comments because the US team has touched down in Moscow for talks. Russia said that it considers the deployment to Ukraine of foreign military personnel under any flag is unacceptable. Deployment of troops or building bases in Ukraine would mean direct involvement of these countries into the conflict with Russia. And that is where the big, huge sticky point is coming up with these negotiations. Ukraine wants security because obviously they don't want Russia to do exactly the same again. Russia doesn't want any foreign military personnel in Ukraine. How they come to the middle of that remains to be seen. So these talks are still ongoing, but it's a bit of fence walking or tightrope walking going on at the moment. I'm not expecting any positive news from these talks. Well, I say that. I'm not expecting us to be at a ceasefire by the end of today. It'd be nice if it was, but I don't think that's the case. There's more chance that we find a bit of a stalemate going on. Russia puts their position out, and then we're going to have to play days or weeks of back and forth trying to get find the middle ground. So be prepared to maybe hear some headlines that will knock risk if there's no immediate deals coming from these meetings. But they're still talking, so that's the main thing. That's the main positive. Right, that's all I've got from the headlines today. So let's move on. Galaxy. Yeah, just talking about the states and stuff. Galaxy. I mean, the thing with all this state stuff, and what do the EU do? Do they tariff stuff that just comes out of a state? What if it's made in one state and finished in another state and shipped from another state? How do they get around it? I don't know. It sounds like a load of bollocks, personally. Let the EU do what the EU want to do. It seems like other countries, and even Mexico now, taking a bit more of a pragmatic approach. Okay, we hear you about tariffs. We'll wait till the deadline day and we'll worry about it then. They're not coming back with tit-for-tat rhetoric as much as they were at first. So, yeah, agricultural is maybe easier, but yeah, we shall see. It's not as if the EU doesn't need a lot of those imports, particularly energy and the like. Right, let's move on anyway. Have a quick look at what's coming up today. I haven't had a look yet. We've got PPI from the US, which always adds or subtracts to what we saw from the CPI data yesterday. So can be a bit of a important number on its own. And as we know, some of the bits and bobs within the PPI data filter through to the PCE, which is what the Fed looks at. So we'll be picking through the numbers later to see what's what. Just bear in mind that PPI can be a bit more volatile in terms of variations than CPI data, because it includes some of the more volatile components like commodities and whatnot. Also got jobless claims, which forever haven't done anything, but you always could be on watch in case you get a wonky one. So we'll keep an eye on that one as well. And that's about it, apart from some bond auctions later on. Right, what's been going on? Right, and I want your comments coming up, because I'm on my Todd. So unless you just want to hear me talking about general stuff and what I'm up to, if you've got any questions about any pairs, assets, or whatever you want to hear about, just pop it in the comments in this Zoom chat, and I'll get round to it. Euro, as said, it's pretty much a euro story this morning. Euro dollar's looking a bit softer. Euro sterling's looking a bit softer. Euro yen's was looking a bit softer. So we're just seeing a bit of pressure on euro here, and it might be some of this German court stuff going on, because that's one of the reasons why we saw this rally in the euro. Not all the reasons, one of the reasons. So if you take that brick out the wall, then you could see a bit of a pullback. Yes, the reg, oh, I'm on gold, mate. I'm on gold. So since we made this high, we've just started making a series of lower highs, lower lows. Not going to get too carried away with that, though, because we're still holding, give or take, the top of this zone. We have nudged into it, but we're not looking like breaking through, although bounces are getting pretty limited up towards that former NFP high and prior support points in the 108.80s. So a little bit of decision making to be had here. Are we going to push lower or get back above that 108.80s? Further out, my analysis is the same. If we're holding the top of this zone, we've got a chance of moving higher. If we're back under this zone and holding, then we're potentially going to move lower. So your levels are the same: 108.30, 108, 107.95, then 107.60. On the top side, still 109.40, 109.60, and then up into 110. So buyers are still coming in. This is probably a test for everyone who's been buying in this rally. I don't know if we're still got some people who are waiting for dips just to play catch up, who got caught on the wrong side down here. That is still possible. We're not dropping back too far in any of these pullbacks. So it's still in the buyer's court, but sellers are obviously going to give it a go on this as well. Euro sterling, it had to push up, started to hold above the zone of the top, 84.20. I thought we might get a look up towards that 84.60, but obviously not. Now we're back below the zone, and we're trying to hold below the 84 handle now too. So this is also similar to what I'm talking about in euro dollar. We're through the zone, and now we're holding it, which suggests we may get some further downside. Levels below this 83.80 is a bit of a minor one. 76, and then 67.70, 65.70, whatever you want to call it. These little areas in here. We've had a lot of traffic going on in here previously. If you want to not mess around, look for a move under 83, 65, 60, 70. We get in a solid move under there, then we might be heading back down towards the low 83s. But we're still keeping up the higher highs, higher lows for now. So if we get a break through here, this 83.75, then maybe we're turning around this move at the moment. Cable, I'm keeping a beady eye on. We've had half an attempt at the 130 level, which is it's a bit of a tech level, but it's also a bit of a psychological level. Big fat round number. We always mess around when we get up here. As you can see, we had a little bit of a hold and a break. Then we had it as solid support, and then we had a bit of messing around and back below. So we're getting up here. I'm potentially looking at this one for a first tap scalp short, just to hit the figure on a first attempt. I'm looking to play that manually. This upward move that we've had last few days is still pretty bullish, hence why you're seeing euro sterling down as well, because as I say, euro dollar is coming down, cable's holding up a bit better. So we may get a test on this. I'll only be looking at that for a snipe. Brian, so the military spending in UK new makes it bullish. Makes what bullish? You're talking about the pound or the euro? If you're talking about the euro, it's the German spending. The UK spending, forget about it. It's all a mess. Starmer came in and cut 500 million from the defence budget as one of his first moves, and now he's apparently found some money under the sofa to put back into it. It's all bollocks. Right, let's have a look at gold. Everyone's asking about gold. Let's move on to gold. Now, it is very important what's going on here. I'm going to come into the short-term chart first of all, just to look at the levels. So we've been talking about these levels, 20s, 30s, messing around with the 40s here as well now. This is going to be potentially huge for gold, these prior highs, if we get a move up there. The reason being, this pullback couldn't even get back to the 38.2. Okay, so that's a bullish signal in itself. I'm going to go into this cleaner chart just to show you that in a bit more detail. So not even coming back to this, okay, is your first bullish signal. This step up, and we've rebuilt support here. 2880s is another bullish signal that's led to this breakup. Now, what happens up here is going to be very, very important. If we come up here and hold another test of this, okay, then there's every possibility we get an even steeper pullback, because that'll be the market saying, no, enough's enough up here. So we're happy to let you run up here, but that's as far as you're going to go. Then we have the potential for a steeper pullback, which may even take out this low, maybe even get a move to the 38.2. Alternatively, we can just nudge the high, or maybe just make a couple of bucks fresh high and then pull back to something like 29, 20, 30s, maybe even 29s. If we do that, then we get a little pencil out. So I'm thinking something like this. If we get something like that, that pulls up to that area, okay, and then we get a bit of waffle like that, that would potentially then set up a break, okay, because it keeps this stepping up going. Okay, but that's what we could do. We could hold just below, or we could just make a new high, but then pull back. And as long as we don't knock out this low, then that's going to keep the break alive. So if you're looking to short against this high and it holds, that's fine, but know where it needs to get to. It needs to get under that level. If we don't get under that level, it's going to keep the break alive. And if we do break, if we eventually break, and I'm thinking about maybe dropping some buy stops in, because if we do break, there's every chance that we're off to the races again, and 3,000 is next, and on we go. But if we do fail, and it's a significant fail, like maybe we don't even get to that high, or we hit that high and fail there, then the other option is that we see something like that coming. I'm not saying it'll be a straight line as that. It might be a little bit wiggly, but we get something that shows a much deeper pullback than what we've got now. So this is all you need to worry about. Okay, let's get the old magnet off. This area up here is all you need to trade off at the moment. Define your trades off of that. Yeah, if you want to trade off the 20s and 30s intraday and whatever, fine, but no, we're at a big level. And the reason why this is a big level, because this is probably, this move that we had here down to 28.30s is probably the second biggest pullback we've had in some of all these big moves. Okay, all coming off from down here. I mean, look, it's been a big old move, particularly this leg. Okay, so this is a decent pullback. This trend isn't for changing. Okay, you put some of the fibs off these longer moves, not even close. as I say, didn't even get close to this fib. So that shows you we are still in a very bullish market. Okay, so even if you do get a fail here and a pullback, you may only get a pullback to the 38.2, maybe the 50, maybe not even down there, maybe back to that break point there, 2790, 2800. And then it bounces and off it goes. So, as I like to say, always take a look. Oh, get off me pencil. Always take a look at the bigger picture. Now, you know my chart's a bit messy in the intraday stuff because I was plotting all the levels on the way up. That's why it often pays to have a nice clean chart. You can get a better idea of the price action. And at 29, 50, 55, that's going to be a big deciding factor for what happens next. Demi wants to look at Euro CAD. Oh, you love putting out these pairs I don't trade a lot, didn't you? Have I even got it on here? Yes, of course I've got it on here. Let's see what's going on here. Then it shows you the last time I looked at this one. What are you up to in this one, Dimmy? You were long last time, if I recall. Are you looking for a long? Okay, well, it's obviously had a big break. All this Euro stuff, giving it the kicker up through these prior levels. I need to redraw that. Let's ping that up there. And we've taken out this prior high. We've got this nice double top up here coming into the 160s. So that's going to be pretty big. And we need to go back a bit longer to see what's going on. So we've got some big old highs to deal with up here. So what's going to get this going? Obviously, better solution in the Canada tariff stuff, and the euro keeping its bid and finding further buying impetus from all this fiscal stuff, likely going to get a run up to here. But you're talking, you know, multi-year levels up here. Okay, so if you get into these areas, if you've been long, then you know, this is where you want to think about what happens if you don't get through some of these levels, because they are pretty decent. If you're looking for where to get long, I certainly wouldn't be wanting to get long up here. Okay, this news, this EU stuff is slowly going to wane in terms of market impact. Okay, if Germany passes everything they want to pass and this 500 billion fund goes through, yeah, we'll probably get a confirmation knee jerk. But if that knee jerk doesn't take out these highs, okay, I wouldn't want to be long. If it takes out these highs, then fine, we may go to continue. So you can look at this level, this high at the moment, if you want to get long, and trade it two ways. Get a headline saying that this 500 billion is going to pass, and we get up there and we don't go through, fine. Then I'll be looking on the short side rather than the long side. If we break through here, though, you want to see it hold. Okay, if you see it hold and you want to get long, then you can try it, because you don't have to be too wrong underneath that level. You can have a nice tight trade trying to get further momentum. But I would look for confirmation. I wouldn't just shut my eyes and go with a break, because if you get a quick move up and then it doesn't hold, then again, you're going to find that likely as a top again, and then we're coming back down again. Otherwise, dips, maybe around the 55.20 area, but it's a little bit messy, this one. 55.50s, 55.20s, maybe a little bit of a zone you can rely on, but this is all short-term stuff, so I wouldn't rely on it that much. What else going to look at today? Let's look at the old oils. Still not a very bullish picture. We have tried to nudge out the top of the zone and trying to hold out the top of it, but we're very limited to the 68 buck area as we've been previously after the lows down here. So I mentioned this on my analysis in the chat room yesterday. We've got this zone, but you've got these extensions, 65.20s, 68s, 68.10 on top. So your first metric is what this happens at this zone. If we're holding the zone, then we've got every chance of getting through 68. If that happens, then maybe you're going to get a run higher, maybe towards 70s. On the downside, you may get under this zone, but you know, this is the big one, 65.20s. That's again another multi-year low. There's a bit of a safety net, really, for when we've moved under this zone. Get below there, then maybe we're going to head to the 61s. And I know Mark's going to tell me off for looking at this continuation contract, but that's all I've got to look at. It just keeps it nice and clean. Couple of bits and bobs I'm still positioned in. Dollar Mex is another one. And this one's making all the right moves still as well. Oh, let's come out a bit. We're getting bounces limited up to 2035-ish. We've had a move up to 40s, but it hasn't held above this level, and it's come back below pretty quickly. And this other sort of minor level, 20, 28, 29, we're now trying to hold below that too. Secondary level down here, 18, 19, we're just messing around, not really knowing what to do. So I want this under this level and holding under this level. Then we're going to move down to 2009, 2010. Well, I'm looking to get off another chunk of my shorts there. If I get that partial fill of my shorts, I'm going to start really yanking down my stops on the rest. And if we get under there, then we've probably got to run on to the 20 level, which will be another sticky point on its own. As I said earlier, Mexico is just taking a little bit of an approach. They're not reacting as sharply on the headlines to anything that Trump says. They're just basically going to kick back and have talks, continue talks, and see what happens on April the 2nd. So we've got a little bit of volatility, tariff volatility coming out of this one, which means it might go a bit quieter, but you can then maybe start respecting the tech levels if you're trading this intraday. Aussie Kiwi, that's been a bit stubborn. Oh, we're up testing the 30. So we've been pissing around this level, which is a bit of a pivot area. So it's, for now, it's washed out. Probably needs to move away and then come back to see if it's still valid. We can't get through this 110 level. I'm still short from averages 1150s. Still happy to stay on the short side. I did manage to get some off at 10.08 the other day, so my positions lightened up, giving me a bit of room to add on further rallies. But I need a break under this 110. We've got this, as I say, this pivot area, which we're just messing around. The range is really 110, 110.30. If we're getting back above this 110.30, it's looking very similar to this. Then maybe we get another push up towards the highs. So I'm keeping a close eye on this one. If we get a move under 110, then it could be a bit of a mini watershed moment, and we get a run down to 109.5, which I'd like very much, of course, being short. Oh yeah, you're looking at the your trend line in there, Dimmy. Okay, I'll have a look at EuroCAD, and I'll have a look at the levels and see if I can get a bit more detail in there. Right, anything else, boys and girls? Let me know in the comments. Let's have a look at the old Swissy, because I know some of you like to have a look at that as well. Not really an awful lot going on in this one either. We have, in that move, knocked under the 50, that we did bounce off this level here, 87.5-ish, 87.60. Got back up into the 88s, but I don't know if this is looking a bit dead cattish at the moment. If we get up a run up towards these high 88s, I'll see how that performs. That will be potentially pretty important, because if we head up there, hit that, and that becomes a roof, then we may continue this down move. And then that likely means we're probably heading below this 87.60 area, maybe for a run on the 61.8 move down there. Dollar China, I finally managed to get a bit off down here into 722s, but as you can see, we held that fib pretty strongly. China still looking to potentially ease. They've still got the tariff bum fight, but it's not really affecting this like we've seen it affect dollar CAD or the loonie in general. So I'm still happy to stay short in this one. A break under this 722s, 21s, probably take us down to the 50 down here. And I'm still short, as I say. I'd love something down near the 7s, but that's probably going to take some big news. But I would look to add back on a rally, though I'll be a bit picky. I would hold out just for another move to these highs rather than missing around in the middle here. What else? I was going to look at another one, but I can't remember what now. Quick look at yields, I think, because we're bang on it. Forget the moving averages. We don't do tech like that on yields, but I can't be bothered to switch them off. This level 434, right up here, that's a bit of a level. We've messed around there before, come down, held. Obviously, that's what the price has done. So here it's running into trouble here. This was a level on the way down. It's now a level on the way back up. If we're above here, and PPI might do that if it's a hot one, we're probably going to be back up 440, maybe even another run up to 4.5%, which will be a bit at odds with the risk environment and some of the market's view over the US economy. Okay, so look at this one also as a bit of a risk play. If things turn sour regarding these US-Russia talks and whatever, and we get a bit of a risk move, we probably get a bit of buying in treasuries on the back of that, which obviously means that we get yields moving as well. So just look at that from the risk aspect as well. As always, got plenty of plates spinning in the air as to what drives markets. Oh, dollar CAD. Let's have a look at dollar CAD quickly. That'll be my last one, unless anyone's got anything else. Again, we've just got the market, I think, is a bit bored with all these to and fro headlines. We do have these talks with Lovnik and its Canadian counterpart, so maybe there'll be some positive comments out of that. Otherwise, we're still pretty much messing around the middle of this zone, this range that we've got here, 42.60s, 44.60s. So let that be your guide. 4 hour, we've got a bit of moving average confluence coming in here around this 143.40 area. So if you're trading intraday, keep an eye on that. Looks like the 55 H4 is also playing resistance up top. So grab a headline if you like it. If it doesn't push out the edge of these intraday levels, these shorter term levels, then you might get a few pips on the board. For me, I'll probably be looking to the edges more than anything else and see if that PPI drives it from the US side as well. Lastly, I said it'd be the last one, but last one. Dollar yen, again, looking a bit more balanced. We're bang in the middle of this move that we had after the break of 149s. Look where we stopped, just shy of that old 50 fib, 149.20s. I said the 149s, 148.80s, 9s, and this level here might be where you see something happen. I said if we were getting above there, we might be looking at potentially changing around this trend, but we're not. Rally sellers are still evident as they've been all year. Now, what I would say is, look at this pattern that we got here. Okay, we had it in the euro. Okay, from the 112, we had it where you couldn't get a rally for love nor money, and then you come down and you start to get a bit of price action where it stops falling. Okay, so this is a bit of a blueprint you can look at. Okay, you don't know where the low is going to be in dollar yen, but what you want to see is a low, a new low, and then we can't get back to that low. Okay, that's your first signal. Okay, we had it here, we had it in dollar yen in the short term, down here, low, new low, can't get back to that low. Okay, so in the short term, you've got that pattern. If you're trading this for the longer term, then you want to see another move here that comes down, either holds that level or holds that level. You get that, then you've got a potential to see a more solid bottom. And then if we go on and take out 149.20s, maybe we'll have a run up to the fib up here, which will be the bigger test. So you've got this move already. You've seen this move happen in the euro. You know the price action, the patterns to watch for. just extrapolate it across to this chart. Okay, so if you want to catch the knives, give yourself a reason. Right, we're going to call that a day. Enough's enough. 45 minutes. We'll be back on Face. Mr. Morrow, the volatility king, is back. Whenever he goes away, we tend to get some volatile moves, and that hasn't disappointed this holiday. So he's all tanned up and sunburnt from Mexico. So it should be on Face later. Thank you, everybody, for coming and seeing us today on the Flow Show. We'll be back again tomorrow. Have a great day.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.